Yeah, fortunately, Mary let me know that you were looking for the link there. All right, gents. So yeah, I've got my students here face to face. I'm just quickly setting up the slides. Sorry, the projector. So just give me a quick second, and then I will I will start the revision. It's not going to be long. I think we can kill this in a session. Anybody want to have 2 sessions? Let me know. But accounting is fun, guys. Mm, the party begins now, isn't it? Not so. All the voices are quiet, whether online or in person. There is silence in the building. Don't worry, guys. Yeah, I think let's just do it in one session, and then I know you important people can get to where you need to be and do what you need to do. So that's fine. Okay, cool. So my projector is all set up, and so we can begin. So I hope you guys have your question paper nearby, because I don't have it on my device. I don't have it on my device, but obviously, at least for the first section, um, we can obviously, speak on that, and then obviously we'll record or show where these amounts are coming from and so forth, so forth. Cool. So I think we should start with the bank recon, because a lot of you guys were complaining about the bank recon and saying the terminology or whatever else was not making sense to you guys. And I can see, yep, indeed, um, the English used there was a bit different from what we're used to in the exercises that we practiced. But yeah, either way, I think with the time you guys had at your disposal, you should have managed to obviously do the things. And most of you, to be fair, actually did. Okay, because obviously, most of you had like 80%, 75. I don't recall having any terrible assignment marks. Okay, but that's it. Let's get into it. Let's get into it. So I'm looking at question 2, and under the required, what does it say under the required? Under the required, it says, firstly, part 1, they want you to do the bank account for 31 July, all right, in the general ledger. Okay, so that's the first thing they want us to do. Then for the second bit, they also now want us to prepare the bank reconciliation for 31 July. Okay, nothing new there. We've seen this before, all right. Clearly indicate if the balance per the bank statement amount you arrive at is favorable or unfavorable. Okay, balance as a mark will be awarded for this. Okay, fine. Right, so I've actually just left the balances there because obviously I know you guys now know how to balance. And so I know that at the end of the day, if you guys can insert the transactions where they should be, you will definitely get to the right um, answers in terms of your balance for the bank account. That said, let's get into these transactions. So it says the following information for July 2021 has been provided to you. A debit balance per bank account 31 July 2001 was 6,250. Okay. Debit balance as per bank account on 31 July. Okay. And they said they want us to do this for 31 July. Okay. So I think here they actually made a mistake. That was supposed to be for 1 July, at 1 July. Yeah. Okay, because I see all this. Wait, was this supposed to be for 1 August? In your assignment, does it say 1 August? It says July. Yeah. Yeah. So then this was actually supposed to be. Mm, but this is how it is actually, according to when I look at the. So I think they were supposed to put that as the 1st of July, which makes sense because why would they tell you to say is the end balance favorable or unfavorable? In other words, you need to find out what the end bank balance was supposed to be. Does that make sense? So there's you'll see quite a few things that I picked up, and I'm going through this now with a fine comb as I was preparing for class. So that was actually supposed to be 1 July, okay, which makes sense because they never gave you any other opening balance. Does that make sense? In the information. So, my heart, extends to you guys with this one. Okay, so there's your opening balance. Just left that in there. Okay. And this should have been, yeah, this should have been one. Should have been one. This should have been one. Because this is the beginning of the. But anyway, let's proceed. On the next, it says bank charges of 130 appeared on the bank statement. Okay. So, like I always do, I would first go and say, okay, these bank charges, where is it going to affect? It appeared on the bank statement, so obviously that means we haven't yet recorded it on our side. Okay, so bank charges. The next question you now ask yourself is, on which side of the this would obviously affect your cash payments journal, which would obviously then affect your bank account. Does that make sense? So then we ask ourselves, are we going to debit or credit bank charges? We're going to credit it 100%. Okay, because we know that bank charges reduce cash we have. And we know that bank decreases on the credit side, increases on the debit side. Okay, right. So we come here and we can just plug in bank charges. Okay, and we know that is 130. There. Then we go to the next one. It says deposit has been recorded on the bank statement as 620 instead of 820. Okay, the deposit slip submitted to the bank had been correctly prepared and recorded in the cash book. Okay, so we've done it correctly on our side. Okay, however, the bank, in the bank statement, they've gotten it wrong. So what must happen? 100%. We corrected in the bank recon. So we just scroll down here. Okay, and you can see, okay, they made an error, so I'm going to put this in the section with the errors. Okay, here you're just going to write correction of error. Okay, and here you then show your calculations. So it's 820, right? Minus the, how much was it? 620. Is that right? Yes. And that's obviously going to give you a 200. Okay. So then before we, well, we can put that down, but then we have to ask ourselves, was this a 200 increase in our account or decrease in our account? So it's a deposit slip. So that should be increasing our account, right? So we can leave it as a positive. We don't need to put brackets. Can you see that? Because this was a deposit. Okay. Yeah. So think of, no, I'm not saying that. I'm saying in the bank they recorded 620, which is obviously less than 820. Makes sense? And this is a deposit, so we were receiving money. Does that make sense? So then we basically, according to the bank statement, we received less than what we should have received. So that's why we're leaving it as a positive show. Aha, yes. Then we would have put it as a negative. Okay. Yes. Uh-huh. Yes. Uh-huh. So remember, we're doing the books of the business. So when we look at the bank statement, that's when we need to put on the hat of the bank in order to adequately interpret it for our purposes. Does that make sense? So we'll say, oh, the debit is obviously a decrease on the bank statement. The credit, however, is an increase for us on the bank statement. Because if we didn't put on their cap, when we now try and interpret what they've done, it'll be a mess for us. Does that make sense? But then all other times, like now that we're in the bank recon, we're actually looking at it, can you see, from our perspective.
So we look at the impact out of.
Exactly. Okay. Brilliant, brilliant. So that's the second, no, the third piece of information there. Then the next one, it says the bank statement showed a deposit of 600, of which we had no details. Okay, so this is a deposit, okay? It was determined that this deposit was from a debtor who had deposited the amount directly into the bank account of the business. Okay, so basically, this, like I said earlier, it's a direct deposit, right? So we are obviously unaware that this deposit was made. Does that make sense? So we now need to record it on our side. So affect our bank account. Okay, so obviously, since this was a deposit, it's going to increase our bank. So we're going to debit that, and I just want to read here. I think it said from a debtor. So here you can actually write debtors info. Okay, and that was for 600. And remember, in the question they also said no folio, so we don't need to worry about that. So that is the fourth bullet point. Then we go to the next one. A receipt for a payment received from the insurance of 1,800 recorded on the incorrect side of the cash book. Okay, so let's think about this. Remember, we always need to understand what is actually happening. So we have an insurance claim, a receipt for a payment received from an insurance company was recorded on the incorrect side. What would make it the incorrect side? It's a payment, right, for insurance. It was put in the wrong journal, so I'm trying to get at which side, which journal was it actually put in, or which side was it actually recorded. But yes, it was put in the wrong journal. Okay. So remember, we don't have a T account for the cash payments, but you're right, technically speaking, in terms of the wrong side. So basically what we're saying is this was recorded like money was received when we're actually making a payment. Does that make sense? So we know that when we receive money, it would be recorded in the CRJ. Does that make sense? But how can we be recording money received when it's an insurance payment? It should be recorded in the cash payments journal, like you guys are putting across. So then we say, okay, cool. Since we have recorded it on the wrong side for 1,800, we now need to credit that amount twice for 3,600. Does that make sense? To cancel out having recorded on the wrong side. Make sense? So we'll do the credit side and we'll say insurance, and we'll then say 3,000. Super. Then on the next one, it says the DSTV subscription payable by the business for 90 Rand was one of the debits on the bank statement. So again, it's on the bank statement, but it's not recorded in our books. So immediately we know we need to record this on the credit side because it's a payment, it's money leaving us on our bank account. Okay, on the bank, but not in our books. Right. Then the next one, yes. is the opposite. Yes, 100%. Okay, right. Okay. Let's continue. Now where are we? So second bullet point before the table, an insurance premium direct debit of 300 appeared on the bank statement in July. Upon inquiring with the bank, it was determined that the premium should have been recorded on the bank statement of Mary Gold General Dealers. Okay, so insurance premium direct debit appeared on the. Okay, so here I think they left out should not have. Can you see that it says should have, but they just forgot to put not. Oh, so yes, we are. Sorry, I thought we were Mary Gold. Okay, so it is written correctly. Okay, so it is fine, but we're saying the same thing. This is an amount that should not have gone off our account because obviously this is for another business altogether. Okay, so as such, that's an error on whose side? Outside of the bank? The bank. So you know whenever there's an error on the bank side, what must happen? They must correct on their side. That's not our problem. They must correct on their side. Okay, I just wanna. Just wanna insert a row. Okay. Again, it's a correction of error. And here you can actually put insurance, so you know what you're referring to. And that was for how much? 300. Okay, right. Okay, so now it says the following deposits recorded in July 2021 cash book did not appear in the bank statement. Mm-hmm. It's not supposed to be on our account, right? So since it's not supposed to be our account, it was a payment, right? Awesome stuff. Okay. Then, okay, so these, okay, we have a deposit, okay? So we need to add this EFT, okay, because it appears on our books, but it doesn't appear in the bank statement. And there you can see this was done on the 31st. So chances are the money just didn't reflect in time for the bank to see it. Okay, then a cash deposit as well. So I'm just going to put deposit here. Usually they give you maybe a check number or something, kind of let you know, okay, at least. Okay, right. EFT, no, these are outstanding deposits. Outstanding checks is when we're making payments. That's why it says it's supposed to be less. Mm-hmm. Right. Okay. Okay. So that's fine. So now let's quickly see. Let's quickly see what else needs to be done. says in July 2021, the bank corrected an error it had made in June 2021, okay, when it had recorded an EFT made by the business as at as 138 instead of 318. Okay, the EFT was correctly recorded in the cash book in June. What must happen with that there? Is there anything we're supposed to do with that? This was now where they started testing you guys to say, do you actually understand what is going on? Okay, I hear people online. I hear people online. Where are my online people? Sorry, I neglected somebody's text there. I heard it earlier. I just forgot. So Bayan supposed to do something there? Yes, no? Are you saying no to we shouldn't do anything there? Ah, thank you, sir. That is 100% it. If they're telling you that we fixed it in, if they fixed it in the bank statement in July, something that was wrong in June, it means that it's fine. Does that make sense? So then we need not worry about it. But now, obviously, if you haven't had enough practice, you'll assume, no. The bank has made an error. I must record it in the bank record. Does that make sense? But when you really think about it, but wait, they just said they fixed it. So why am I recording it in the bank record? So again, it goes back to the whole thing of, with practice, you gain confidence in your decision making. Because I believe you would be wrestling with this. Am I supposed to do something, or should I just leave it? Okay. At least now you know you need to just leave it. So I've been X'd it out on my side and put nothing. Then the business earned interest on current account 200, which has not yet been recorded by the business's books. Okay, very straightforward. So we're going to debit it. So interest received. Okay, how much did they say that was for? 200 Rand. Okay, super. Happiness Day. The debit order of 2,000 in favor of JHB Property Management for rent appears on the bank statement. Okay, the debit order of 2,000 in favor of JP Property Management for rent. Okay, so this is rent. Appears on the bank statement. Okay, so if it appears on the bank statement, it's a debit order. Clearly, we haven't recorded it. That's why they're making mention of this. Make sense? So then, obviously, again, we come here and we say rent. The landlord wants his money. In fact, has taken his money, but we haven't recorded it to 2,000. Okay? Done. Then let's see, is there anything else? There's nothing else there. So then your next job was obviously then to quickly just balance. Okay? And already you can see this side. Oh. Uh-huh. That insurance, let's see.
So it was put on the CPJ, but it should have been CRJ.
Should have been in the CRJ. So let's see. A receipt for payment received from an insurance company was recorded on the incorrect side of the characters. Yeah, you're right. For payment received was recorded on the wrong side. So basically, we treated it like it was an expense, okay, but it was actually payment received. So thank you, Mary, you're right. Sorry, say again. I want to. No, so actually, what this means is that we actually claimed for something. Because you know, insurance pays us. Let's say maybe I had insurance on stuff in the house, and then maybe something got stolen. Then obviously I go and claim, and then they pay me for whatever got stolen. Does it make sense? So what they're then saying is we claimed insurance on something, and then we were getting a payment, but we recorded it like we were actually paying the insurance company. Is it making sense now? Okay. Right. So if we add those up, do we get the correct amount? Or I can cheat and then just look at my answers that I have. Make sure I got it right there. Huh? Let's see. Yeah. Oh, I am on the right. Okay, yeah. So that's exactly it. We are now on the right accord. Okay, there we have it. We now have our bank balance. Let me zoom out. You guys know how to balance. We know this debit side is the bigger side. Okay, then this is the smaller side on the credit side. Okay, we know our balance brought down is on the debit side. So is this a positive? Is it a favorable balance or unfavorable balance? It's a favorable balance. Okay, so we're happy. Okay, I think I heard something go off in the chat. I don't know. Okay, no, that is it. We didn't have any outstanding checks. Okay, so these guys did it slightly different, or my answers are slightly different, should I say? Okay. Here they did those corrections under outstanding checks, but either way, you would have gotten your, as long as I can identify that this is where this is coming from, this is where this is coming from. Okay. Because for me, the correction of errors should be below the checks being paid, all right, or where money is leaving us, and it should be below where deposits are coming in. Does that make sense? I like that format, but I see that in your textbooks as well. Sometimes they do it differently. Yes. Which alternative? The way we did it now. Look, for me, it also makes more sense the way we did it now. But I leave it to you guys to decide what method works best for you. Because at the end of the day, I want to make sure that you get it right. If you do it like this, it's fine. But again, I just want to do it in the method that makes most sense. Yeah. So what you would then do is you would say, you would make it so, like here, and unfortunately we have the less outstanding check. So isn't, if it was naturally an outstanding check, it means that it's money leaving us, right? So we put brackets here. That makes sense. But if it was actually a check that was made in error, then what we would do is you remove the brackets because it's actually money that's supposed to come in. Can you see that? Like we did over here. So you do the exact same thing, but can you see now here we didn't put brackets around these because these payments were not supposed to go. Does that make sense? So yeah, it's the same thing. I just prefer to have this. I just like the format of, okay, outstanding checks, payments that should have gone off that the bank did not, you know, payments, deposits, or money that should have come in, but the bank has not recognized it. and then saying error 0. But yeah, again, it makes no difference because you're going to arrive at the same number. So glad that you asked, okay? Because that's exactly where we're going now. They did not give us the balance as per the bank account. So it was actually you guys' job to work it out, okay? Now the only way you could have worked that out is if you worked backwards. We know that the whole purpose of bank reconciliation is to ensure that our bank account matches our bank account balance matches the balance of the bank statement. Does that make sense? That's what bank recon is all about. These amounts must be the same. So we know that, okay, after doing all our amendments and our additional information, the bank balance that we get is this 8,430. And that is what we should get for our bank reconciliation balance. That's what we should get. So we then say to ourselves, okay, cool, but I don't have my opening balance. Okay, but I have been given all the other information in terms of any adjustments and errors and things like that. So I now need to work my way backwards to get this amount. So basically here, you are just supposed to take that amount and actually deduct all these amounts, since these are all positive. And where you had a negative, you would then obviously add that, because then you're working in the opposite direction. And that's how you would then get to the 5,860. Okay. So again, there is a question like this in your assignment, but again, it takes having practiced these things to know, they can ask this question like this. They can ask this question like this. Does that make sense? They could have spun this the other way around. They could have said, here's your balance as per bank account, as per bank statement, but they don't give you the balance as per the bank account. Okay? And then you would have to say, okay, fine, I've got all that. Let me work my way backwards to find out what I should have as per my balance as per bank account. Okay? So yeah. Right. So that was a decent question. It wasn't too bad. It was just, yeah, maybe the English there might have been slightly different, but I see it wasn't that bad. Really wasn't that bad. Yeah. Yes, you may do that. But again, I'm going to upload this so she could screenshot it. But I mean, you can do this right away. It's fine. Mm-hmm. Yeah. All right. All right. All right. So let's jump into question 3 then. Question 3. We're just going to talk about it. Yes?
For the bank and
Bank general ledger. Yes, let me.
we take transaction into detail.
Uh-huh.
And sometimes the execution materials is
Yes.
which one should be.
So my advice to you, it depends on the way they ask the question. Typically, if they ask it, in a nice structure where they make you do the cash payments journal, cash receipts journal, obviously all the payments, all the cash you've received, you'll get those totals. So you wouldn't then be saying insurance and interest received, all that kind of stuff. Does that make sense? You would literally just say total receipts, total payments on the credit list. So it depends on the question, but typically you would do it with the bulking up. Yeah. But since they gave you a question like this, then you can break it down. And in the memo, it will be broken down like this. All right, good. Good question. Oh, okay. Good. Cool. Right. So, in fact, you know what? I think because we only have like literally 3 minutes, it's better to actually go through maybe some of the theory questions, and then when we come back from the break, we can quickly just do. We can quickly just do question 3. Okay. So with question 1, they were basically asking you guys to list the three reasons why you would get different amounts or different balances in your bank account that we record in our own books and the bank statement that we get from FNB, Investec, etc., etc. And here they tell you, well, you would have gotten this out of your textbook. You've got an adjustment difference, all right, also known as and then you also known as an awareness difference, and then you've got the timing difference, okay? So adjustment difference, they were basically talking to the fact that the bank will have done things that we are not aware of. Okay, that's the adjustment difference. Okay, so we then now need to adjust on our side. And then timing difference is actually the other way around. We are aware of certain transactions, but the bank is not aware of those transactions. Okay, and there you've got a few examples in terms of those two. Then errors is pretty straightforward. We can make an error on our side, and the bank can make an error as well. So you need to identify who made the error, and then record accordingly or act accordingly. Okay. Yeah. So yeah, you can even get those examples in your textbook. So I won't go over them actually now, but fortunately you have them on your screen every day. So that shouldn't be too much of an issue. Then the next thing that they did is they then went on to give you true and false questions. Okay. Now, fortunately, the questions, the statements are right in front of you. Okay, so you don't even need to look at your question paper for now. So the first one was interest on current. Interest on current is an example of a time difference. Okay, remember we said timing difference is when what? When we, the business, are aware of something, but the bank isn't. So, interest on current account. Who would not be aware? The business. Yes, the business would not be aware. So that is a false statement. Okay, that would actually be an adjusting difference, not a timing difference. Then direct deposit is an example of an adjustment difference. That's true. Because what's happening with a direct deposit? The money is going straight to the bank. We didn't know that the debtor or whoever actually paid that money. Does it make sense? So that's 100% true. Bank charges is an example of a timing difference. Nope, can't be. Okay? We wouldn't be aware of our bank charges and then FNB doesn't know about it. Because they're the ones charging. Does it make sense? Right? So that's definitely false. Interest on overdraft is an example of a timing difference. Again, false. Okay? For the very same reasons I just highlighted for the one earlier. Now, debit order is an example of an adjusting difference. What's happening with the debit order? The debit order is going off. Oh, sorry. This is why I actually wrote the definition. Okay. Now, a debit order, I come to VC, I say, I want school, VC. I want to do my studies. So I agree with VC, you guys can do a debit order on my account. Okay? And guess what then happens? I sign the papers. Me and VC are totally aware of what's going on. We know which day this debit order is going to go off. But does FNB or Investec or ABSA or Standard Bank know about it? They're not aware of it. Obviously, they're going to see it when the money goes off, but they're not aware of it. So it is true that that is actually a adjustment difference. Does that make sense? Okay, we're aware of it, but the bank is not. Then bank understates a deposit on the bank statement is an example of a timing difference. Okay, so in other words, the bank made an error. Okay, if the bank made an error, then they're obviously unaware of how much the deposit should be. Okay, so it is indeed, no, sorry, that is not a timing difference. That is not a timing difference. That is an error. That is an error, so that is false. I was there busy explaining wrong things. Okay, right, so that is false. It's not a timing difference. That is a plain error. Plain error. Okay, then we go to this one. This one, hey guys, you should not have had things wrong here. So here they were basically giving us two columns and they were saying we must match. So in the actual question, they let us know that Zoom Stores was a supplier that we buy from on credit. And Mr. Andile is somebody who buys from us on credit. Okay? So obviously somebody who we buy from on credit is a creditor. And somebody who buys from us on credit is a debtor. Okay? Then we go on to the next one. All right? They said general ledger account that provides us with an exact amount of how much is being owed to us from credit sales. Okay? General ledger account. Okay? So that's obviously the debtor's control. Okay? Emphasis. So if you had written, well, here you had to select. So there was no debtor's journal. Okay? There's no way, but actually, thank goodness there was no way that, because I think some students might have selected that. General ledger account that provides us with an exact amount of how much we owe from credit purchases. Okay, thank you for that. So obviously, if we owe someone, they are a creditor. Okay, general ledger account where we record that is obviously your creditor's control. All right, or accounts payable if we were in America. All right, but you guys know this by now because we also use this when we're looking at the notes. All right, accounts payable, accounts receivable, so you guys know these things. Then the list, final one, the list that is total and compared, that should be and compared, with the balance of the debtors control account at the end of the month, end of each month. Okay, this is obviously the debtors list. Okay, so you can see how they bring these questions. So yeah, but I think, with the way we go about our lectures, making sure we understand first and so forth, I think you guys will be fine with this type of theory. You should get most of your marks on this type of theory. Okay? So again, don't ever underestimate the value of understanding what's actually happening to the market. Okay? So guys, I think let's call it let's take a breather. And then we can reconnect. What's the time now? We can reconnect at let's say 6 past 11, and then we will finish off question 3. We'll just discuss it, so it won't take us long, and then yeah, we'll call it a day.